Market Chameleons, my favorite chameleon, Dimitri Pargamonic. How you doing, Dima?
Good morning, Will. How are you?
Great. So we're going to do Q&A today, correct?
Yep.
All right, let's start with the disclaimer. What do you think?
Okay. Yep. Good morning, everyone. Before you get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, call your broker. That's what they're there for, to help answer your questions and provide you with guidance. There's the disclaimer.
Excellent.
And with that, let me get started. I'm going to share my screen.
So I did put the link out to the Chameleon community on the chat. If anyone has a question, you can come over to the Zoom, raise your hand, and we'll get to it live. Obviously, it's just your voice. So we've got that out there. Anything else, D, before we get started?
Yeah, so the way the Q&A works, any type of questions you may have, it's open to the community. The idea is that if you have a question, it could be either how to use a particular tools, maybe something you've seen on one of the screeners that might be unusual. It could be something that you've experienced in trading that you want to share, or that you weren't expecting and you wanted to see, have a question about that. I think that this will be helpful to the entire community. If you share those experiences, if you share those questions because other people might have them, or they didn't run into those situations before. So it's a way to learn. And the way to ask, if it's a short question, you can put it in a chat on the YouTube live chat. Will's monitoring them. He'll read them back to me. If it's a deeper question, maybe with a lot of surrounding circumstances, then a good way to do it is click on that link that we'll put in there that takes you over to Zoom. When you get to the Zoom, there's a little hand you could click on, right, to raise your hand. This way Will sees it. He'll let you in. You don't have to turn on your camera, but you'll turn on your voice. You could ask the question. We could all hear, maybe go to the screen that you're looking at and, focus and narrow down onto that question. So again, two ways to do it. We had a couple people maybe are still out there said that they're going to come on the show and ask some questions. So we'll wait for that. And what we'll do is we'll just we'll begin the show, look at what's moving in the pre-market hours. And then while we're waiting for those questions to queue up, I have some list of questions from prior shows, from emails, from chats that I could kind of default to. Until those questions come in.
We did have a question, and I have to interpret it, but Baiju was asking, could you please explain why not a unusual open interest screen, not just an unusual open volume?
Okay. All right. So maybe that's where we'll start. And thank you, Baiju. I think I saw your email come through this morning. So maybe we'll start with that question. So that's a good start, right? The difference between volume and open interest is important. And why not screen, we have unusual option volume. Why not look for, unusual open interest as well? So we'll cover those two topics. Good question. So let's start really quickly. We'll go over the pre-market report as usual, and then we'll get to that question. Sound good?
Perfect.
All right. Pre-market report. These are stocks that are trading in the pre-market hours. We have the most active stocks, biggest percentage gainers, biggest percentage decliners. And I'm just coming down here really quickly. We see that 112 stocks made our percentage gainers list, 54 in the percentage decliners list. So from that perspective, favors more of a bullish bias at the open. I'm going to take a look at the higher market cap stocks as well and see what's going on there if we see a similar picture. So market cap filter, I'm going to set to $20 billion or higher. In market cap here, we see 20 on the percentage gainers list, 7 on the percentage decliners list. So from that perspective, it's a little bit, it's more bullish at the open, but not a very big list of stocks. So, 20 and 7, not very big. So almost like a mix to slightly bullish bias at the open. If no questions you got on the pre-market, let's just cover, unusual option volume, and open interest. Okay.
Just so you know, we do have someone raising their hand in the queue. If you want to get to that first, it's up to you.
Oh, you mean like a live question?
We have a live question coming all the way from Chicago.
Okay, let's take the live question, because at least then I could ask what the surrounding circumstances. But I have this question. I'm not gonna, I'm gonna get back to this question. If not today, I will cover it.
Great, and that question is coming from Baiju, and he did say it was his email, so he's thankful. So Baiju, we are going to get to that. Bob is stepping up live. Bob's almost becoming a regular, so we'll get Bob on right now, D.
Okay, yeah, let's take the live question first.
All right, here you go. Rob from Chicago. Hey, Rob, you got to unmute. Thanks for joining.
Bob, hey, Bob, you're on mute. Just unmute your speaker.
Okay. Good morning, Dimitri. Hey. Good morning, Will.
Good morning, Bob. How are you?
Good. I'd love to hear the answer for Baiju's question. I also have a request. The S&P 500, as I understand it, quarterly adjusts, rebalances, adds and subtracts companies from it on a quarterly basis. And I know that this year alone, Tesla and now Match Holdings have had tremendous moves after they were added to the S&P. Do we have a filter that tracks that and that you can compare it against, for companies that are upcoming? And is there any way to work with that, to get trading ideas off of that S&P addition?
Right. And thanks for the question. So Bob makes a good point. That is something that we've seen significant moves when a company either gets added to a large index like an S&P 500 or gets removed. And the reason is that any funds or ETFs or, mutual funds that track S&P 500 performance has to buy that stock, right? So now they have to rebalance their own portfolio of stocks that they hold to keep track of the S&P 500. And really, it also creates longer term pressure on some stocks, because when you get funds flowing into, indexes like S&P 500 or whatever, those stocks, right, naturally that belong to that index kind of get a continuous flow of money going in, right, through either mutual funds or through 401ks or pension funds. So it's a good observation. Usually you do see a pop, in the stocks. Not everybody, we do witness that. But the answer to a question right now is we don't have a report that tracks that specifically. We have a lot of different reports, and that's a good observation. I'm going to take a look at it, see, what kind of data we're kind of getting from our vendors, if we could even detect that upcoming change in the index. We don't have anything that I could think of right now that specifically tracks it or report very specific to that. But I will I'll take a closer look, but if I could find something and maybe we could create something. But right now, the answer is I don't have anything. I know. I think I could show you.
Yeah, I know that the S&P itself, I think, publishes a newsletter or a bulletin or something of the sort.
Right.
That I don't know whether that's includable as a just part of the news cycle. And of course, if we can draw the data out of that, it seems that both the addition and the subtraction from the S&P, that a lot of them will drop down from the S&P 500 down into the 3,000, or one of them was eliminated because of size, and it could be some really great positional plays, just if you know that that's going to happen when it happens. It seems like
No, and I agree with you. I think that one of the issues with that scenario is, so when we receive data, data from data feeds, there's two types. There's a structured data and an unstructured. And a structured data is kind of like what you could get through a feed, and programmatically you could then take that data and start doing analytics and and it's kind of easy through an API, right? So like stock prices, those are structured data. We get a feed. We kind of know what's the program already knows. And unstructured data is something that is not, standardized where we're getting it through a feed or one of our vendors, right? Because they're different feeds, right? There's no one like super feed that gets everything. So you got to go to different vendors getting it. And that data where they rebalance it and give you that information, it's not in a structured format that just kind of goes right into our database. It would have to be something where we look at, and we have already teams that take unstructured data. We do it every day where, like with earnings and with dividends and with, events coming up in PDFA, there's no like super feed that gives it to you. So we have to go through there. We have a team of people like reading through these things and structuring that data. This what you mentioned, is not part of our current process of structuring. I know, and you got a lot of different rebalances because it's not only the S&P 500, because you got the NASDAQ, you got a Russell, right? You have a lot of them that just kind of like rebalance.
Yep.
So I think it would be a valuable. I think it is valuable data. I think that you're right that there is maybe a positional play in it. And I'll take a look at it, but as of now, I don't have anything to show you.
All right, thank you, and that's answered my question. I'll be anxious to hear the other question that we had.
Okay,
great job, Rob. Thanks for coming a regular, buddy. We're going to put a show once a week with Rob from Chicago. Good job.
Definitely,
very much appreciated.
Thanks a lot.
Bye.
Okay, so let's get to the other question. It's a good question because there's a distinction between unusual option volume, which is just the trade. So let's take a look here. So, and here's the question. Let me just go to the unusual option volume. So we're seeing here that unusual option volume, it's showing you the trades for today, right? So what's going on is what we're seeing is that there's a lot of volume today. Here's like an SPIR. This is the option volume for today, 20,531. And so what makes that unusual? Well, what makes it unusual is if we compare that volume, we could compare that volume to the last, let's say 30 days. And we say, okay, well, on average, from day to day, we see about 1,825 contracts trade. So if we compare the two, right, relative volume, that's 11 times its daily volume. So that's what makes it unusual, right? We have to have a benchmark. And if we have a benchmark and then we could compare it to the benchmark, we could kind of see how far away it is from the benchmark that we're tracking. Now, the volume alone, right, can just represent the days trade. So there are kind of two things can be going on. There could be a lot of volume with people opening up new positions and committing to those positions. In other words, you bought 10 contracts and you're holding on to those 10 contracts because you're waiting for something to happen going into the future. You could also buy those 10 contracts and sell them the same day. So if you buy 10 contracts and you sell them the same day, you kind of took a 1 day, maybe you saw something, you took a 1 day risk and, maybe you made a profit, maybe you didn't and you got out because it didn't work out for you. But what will happen is that day, the volume that you created is 20, right? You bought 10, then you sold that 10 back out. So the volume is 20 contracts. But at the end of the day, if that's all that traded, your open interest is 0 because you're done. You're out of that contract and there's no more commitment, right? There's no more contracts, open interest. And that's a difference. We went over the difference between volume and open interest. Also, there could be volume on the day that is very large, but it's closing previous positions. So you could have a buildup of open interest going into earnings, for example. Then when the earnings are released, the next day, a lot of people who had open positions because they thought maybe the stock's going to go up, down, a volatility play, whatever it is, now that the outcome is known, people are closing out their positions. So you could still get a very large volume in the options, but what's happening is that they're just closing out their positions that they held on previously to the actual event. Okay, so when we look at it here in the volume, one of the things that we see here on the side is that there is unusual option volume here, and we see that SPIR in the last 12 days popped up twice in our unusual options volume report, right? So I'm going to just open this up and you kind of get a history of the last 12 days. So we see here the last time was August 26th. There was a spike in unusual option volume, and we see here, here that this is the latest, and we could kind of take a look at, well, what's been going on in the open interest, right? So we see that the open interest was climbing mostly in the calls, right? So that's what's happening. It's climbing mostly in the calls, leading up to that big day, right? Where it jumped 137%. So even though we had this big 19% move, this is the implied vol. Even on this, we had a big 9% move, and it looks like it's been pretty volatile, this particular stock. The open interest kind of kept climbing, right? It doesn't look like that, the stock moved and then people started closing out of their positions. So how do we then screen for maybe unusual open interest, right? And what makes an open interest even unusual is the question, like maybe this is not even that high in this particular stock. So I'll just take a look here in SPIR and just to get a sense of what that means. I'm going to come down here to open interest. So here we have like different tabs for open interest. This is actually you don't see this last one, that's just on mine because I test new things out. But just looking at this top part over here, you see these little meters. These little meters kind of tell you the open interest relative to the last 252 days, right? So what we're doing is we're tracking daily open interest and saying, based on, we have 35,500 contracts currently open on the calls, 6,748 on the puts. Okay, they both increased. But you could see that in the last 52 weeks, the average has been 22,000. In the last 5 days, it increased by 55%. Last day, almost 40%. And where does this 35,500 fall in the last 252 days? Well, according to this meter, right, if we looked at the last 252 days in the last 52 weeks, this is the highest it's been. Okay, so that's what's making it unusual. Not only are we above the average, but we're the 100th percentile, meaning that every day we look back and looked at how much open interest there were in the calls. In last year, this is the highest we've been. Does that make sense to people so far? So that's kind of like what's making this unusual. Now, so you could start from the unusual option volume, and you could kind of take a look also at the, at the open interest, just like I showed you, because you can have those historicals. But let's try to do a screen of an unusual option volume on a particular contract. So here, if you go under options, there's open interest analysis, right? And on the open interest analysis, we have different tabs. We have by symbol, right? So you could look at total open interest by symbol. So here's a relative, relative to the 90-day average. We could see how much open interest is currently out there relative to the 90-day moving average. We could also look by expiration, where it's building up, or by a particular option contract. Okay, you could also take a look at like 5-day changes here. So let's take a look at, because each one of them could probably spend almost, let's say 20 minutes to a half hour. Let's take a look at the by option contract. So this will be, where do we see a significant change, in a particular option contract, right? Like, so these are individual option contracts for these symbols. We see the price of the option, the change on the day. So another thing about open interest is the following, important to know. That's really important, that the option itself, it's trading intraday. The volume, the is accumulating throughout the day, right? The option price is changing and so forth. So that's what we're seeing here. The open interest itself does not change intraday, right? So the open interest is calculated by the Options Clearing Corporation once a day based on settle end of day trades. So there's trading throughout the day. Then at the end of the day, the OCC looks at the settled trades. So they take out any broken trades, adjustments, splits, any kind of corporate actions, exercises, assignment, all that. They take all of that into consideration, right? They process it overnight. So we don't see the new open interest until the next business day. All right. That's when we get it from our vendors. We process that data. So anytime you look at open interest, it's not updating intraday. It's not updating live. You're looking at from the previous trading day. Okay. So that's important to know, because some people are looking at volume and trying to see, and the open interest isn't changing. They don't know why. That's why. So here we could kind of take a look at, the change in open interest, because that's what we're looking at. Well, is there a big change in an open interest on a particular line, right? So that's what we're seeing, the new open interest. Here's the change. We have the percentage change, and then we need a benchmark. So remember, when we talked about what makes it unusual, we have to compare it to some benchmark, something that we're, regularly expected to see, but we're seeing a much bigger number than usual, right? So how do we create that benchmark is the question. So here we take a look at this statistic over here is comparing the open interest change on a particular line based on the average daily option volume in that stock. All right. So if the stock, trades like here in A, right, on average, there's 1,491 contracts traded in total in aggregate, right? All calls, all puts, all strikes, 1,491 on average. So if the open interest alone changed by a significant amount, right? So the open interest, there had to be some trades going on. People held on to those positions. If that changed by 2,500, right, new positions were established, that represents 171% of the average daily option volume. So there's a pretty significant amount of open interest. Whatever the trading was, it increased open interest by a significant amount. Okay, so do you guys kind of see that? If not, let me know. And we could filter that, right? Open interest change, by average daily option volumes. So we could do maybe, let's say, over 50%.
Hey, Dean, we did have a couple questions. Rob asks if you could go back and show how you got to this page, your click-through process.
Yeah.
And while you're doing that, Mike was asking, when you see open interest, is there any indicator of whether it is a short or long position in the open interest?
Okay. So the first question was, how did I get here? So on the options, right, under options, we kind of go right here, open interest section. If you hit this OI analysis, it brings you to a page with all these tabs: dashboard, by symbol, by expiration, by option contracts, 5-day changes. So I just went right here by option contract. That's what I'm on now, right now. So that's how I got there from the main menu under options, OI analysis. Now, the second question was, what was the second question? Can you read that again?
Mike was asking, when you see open interest, is there any indicator of, he's basically wondering if the buildup is long or short. Obviously there's someone on each side of the trade, so it's both long and short potentially.
Right. So when we talk about option contracts, right, it's important to know, because some people confuse being long or short. Getting long or short in option is not the same thing as getting directional, because options kind of work by implied volatility, the premium people are paying, right? So that's what are people buying more option contracts or selling? And that really, we need a benchmark as well, right? It's kind of like, are people, when you're looking at real estate prices and they're moving up, well, they're moving up, but there's buyers and sellers, right? So at every transaction, there's always a buyer and a seller, or there's no transaction. But if we benchmark the prices and we see the prices are moving up, the assumption is that there are more people buying than selling, right? There's more buying pressure, there's more demand to buy because they're paying higher prices than there is to sell. Sometimes they refer to it as a buyer's market or seller's market. So in the options, the benchmarks that we use is implied volatility, because options are derivatives. Options will move up and down, with the stock price, but they also have other factors in it, like decay. They have implied volatility. There's other things going in there. So our people, when we look at a particular option, ABB, right, and we see that a big increase in open interest here, 582 in ABB for that particular stock, that's kind of significant. We see that the price of the option did go up, but so did the stock. But what we're seeing is that the implied volatility went up, and the implied volatility is indicating that that's how we're benchmarking, that people are paying more for option premium than they did the day before. Okay, does that make sense? That they're paying more, and that if they're paying more for option premium and then the open interest is increasing, our assumption is that there is a demand to get long this option, or demand to buy this option. Okay, does that make sense to hopefully that question? If not, let me know. And that's why sometimes hearing the question and having the person on is helpful, but I think that's what you're asking. That's how I wanted to.
Well, Mike, I hope that's helpful. Let us know. And again, if you ever want to come on and ask it again live, we're always welcome to that.
All right. So keep in mind that to find things that are unusual, we need to use benchmarks, right? So we have to kind of decide what kind of benchmark and sometimes benchmarks they're arbitrarily, right? Like, what do you want to compare? Do you want to compare to the 90-day average, the one year average, the 30-day average, the 5-year average? You kind of have to, choose what, and it's arbitrary. So we kind of, depending what we're looking at, we either follow like what, best practices that we see out there, or what we think is a significant, what would be significant amount.
Well, Mike says that's helpful, D. Thank you.
Okay, thank you. So in this case, what we're doing is comparing the open interest change to the average daily volume, right? Because on average, if we see some kind of volume in the day, but that's aggregated throughout all the options, and a lot of times, that volume does not result in increased open interest, just like we talked about. So since we're looking for an increase in the open interest, we want to compare that to the average daily volume. And then we see here, now sometimes in a low volume stock, and a significant amount could be, on a relative basis, could be high, but it might not be that significant, so 300 contracts, you kind of have to decide is that significant amount enough? Maybe look at the notional value of the trade, how it traded, but you do have the ability to say, you know what, I need a minimum, open interest change of maybe, let's say 2,000 contracts. So then you could kind of keep filtering it down lower, from this amount to this amount. And you keep filtering it down. So this is one way to, before the market opens, to compare the open interest, the volume from the previous day to the open interest today. Now, what happens is once the market opens, these are going to stay, right? These are going to stay the same until the next day, but we're going to start seeing these changing because now they're going to be opened for trading throughout the day. So hopefully, I'm answering that question in the email. I think it's a good question. I think this is what he was asking. But again, if I didn't answer it fully, or if you were thinking something different, you can come on the show and maybe tell us where you're looking, or if you had a more specific question. That's the best way to do it.
All right, perfect. Well, we're right against the opening bell. D, any final thoughts for the community?
No, everybody stay safe out there. Have a good trading day. We hope to see you guys tomorrow. We're working, I did mention we have, we do have a lot of customers been using MarketChameleon for a long time, 2 years or longer. And sometimes they share things with me that I think is very interesting, and I would like them to share with the rest of the community, either like through a webinar or through just like coming on a show and talking about it. And a lot of times people don't want to, either they shy away, sometimes they don't want to share, this is their, they've done the research, it's working for them, so they're just happy, not doing that. But other times people may share. So I do ask, would you be willing to come on and share? So I'm working on it. Maybe we'll have someone come on the show, kind of talk about, how they've used the data and analytics to come up with strategies that have been working for them, that they've been doing, some are very successful. And we potentially might have another, person come on with a webinar, kind of show their strategy, talk about it, share their spreadsheets and their thought process behind the trades.
That is awesome, D. Can't wait for that. Let's hope they do come on. And we do have Jake on today. He was on the chat on the Zoom. So we have Jake's webinar will probably be coming up in the next couple of weeks. Raj will be this month, and we do our IBKR webinar next Tuesday, just looking out into the future for upcoming webinars. Thanks for joining the morning show, everyone. Great job. And it's a holiday today, correct, D, for a lot of chameleons?
Yep. Thanks. Yeah. So happy New Year, the Rosh Hashanah. So happy holidays. Stay safe.
Happy New Year, everybody.
And
all right, D,
and hope to see you guys tomorrow.
Great job. Happy New Year, buddy. All right.